Hello guys, glad to have you on board again. Today we're going to go straight to the essential. I'm going to talk about the Bitcoin because I bet it's in everybody's mind at the moment. It's making headlines and obviously it's triggering some stupid emotions here and there. So we're just going to make sure that you guys are making cold-blooded decisions, smart decisions instead of stupid, dumb trading out of emotions. Normally you shouldn't be doing that because we've been repeating this for quite some times already, so you shouldn't be surprised about what's happening right now. It's pretty much what we were expecting, and we are nearly reaching out to the bottom of the black box that we basically set it a few days ago. So everything that happens in there is none of your concern. You just don't give a shit about that. And to be clear, facing what I'm seeing today, we might even extend that black box to 3,800. So as long as we're not below that price, there's nothing you give a shit about. Obviously, on the latest few days, I made kind of a point or a kind of an argument saying we might have a triple signal. But first of all, it's a taking profit signal, so it's nothing more than just something you might take in consideration when you're balancing bulls and bears demand. It's just you say, okay, there's a risk for the bulls to take it over. It doesn't mean they did it. And moreover, that signal needs to happen in a technical price area. We had a technical price area in there, but the market just fucked it up. I said as long as we are not breaking it down, we may consider this as a support, and if we go back to resistances, that will mean the bulls may have it in control. Instead of reaching back to resistances, we've done clearly the opposite. We fucked up the support, made a nice candle close right below the level. So there is no support. It's just pure and simple. It was a risk of a potential bullish reactivation. That was the only goal of my previous remarks. But we needed to have price reaction. We have it. It's damn fucking bearish. And if you have a look at what happened in an intraday basis, it's even worse than that. Because this is what looks like when you have a wrecking market. Market's wrecking stop losses and then fail to find buyers, so it's exhausting itself in a continuation bearish move, and then nothing happens. Volatility disappears. We've got market price acceptation, which is not what we wanted to see. We wanted to see bullish reactivation out of it, not the market accepting to new lows. So we're accepting this, and what happens next is really a big concern, because this is far different price action than this. This is wrecking market, stop loss triggering. This is market making kind of trading, which means now market makers are trading in there and they are trading with robots, and you can clearly see that this is kind of a self-driven market. The market is moving from point A to point B, and as no one cares about those prices, the market maker took it over. So right now what we have is a very dangerous structure. If you're thinking about buying, get the hell out of here or cut your fingers, but making sure you're not pressing any button right now, and especially not the damn buying button, because what you're trading right now is a very dangerous context. Low liquidity, retail traders trying to buy versus market maker. Market maker is obviously going to make better decisions, and it's just going to do the opposite of what the retail traders are doing. As long as they're buying, they will sell. As long as, and if the retail traders are switching to selling, the market maker will buy them out. So you will probably be among them, and which means somebody smarter, faster, and has a lot more money than you is going to trade on the opposite side. So you have basically no chances to be a winner out there. So just get the fuck out of here. You just don't trade those prices. You let the market maker handle them. It's pretty hard to follow the market maker because you just don't know when it's going to stop. And as long as most retail traders are buying, the market maker will sell. But at some point, if the consensus starts to reverse, instantly those algorithms will see the demand switching and they'll start buying again. They'll start buying you out. So it's pretty much anything you'll do, the market maker will do it faster and with more money. So get the hell out of here. We're here to trade when you got at least a statistical advantage. When we're on that kind of market maker versus retail traders, you're going to be among the retail traders and you're probably going to be taken down like a beast or hunted down. And this is not the point. We're here to make money, not to trade against the market maker. So I'll suggest All those arguments should really show us some red flags in here. The market is bearish, breaking down through supports. We're looking at buying, but long-term buy and hold. So all that short-term volatility is none of our concerns, and we're straight into the black box. So normally you shouldn't give a shit about what's happening right now, even though everybody is crying for dead and crying for more blood in the crypto market, or trying to figure out what the damn bottom is going to be. Let the dumb talk. I hope you're no longer one of those guys who are going to panic doing or tweeting things each and every 5 minutes trying to figure out what the fuck the bottom is going to be. No one knows what the bottom will be. And who the hell think it knows is just damn stupid trader. So it's not how it goes. Don't follow the guys who are giving you numbers right now. Just follow the guys who are just giving you the right and only right information. No one knows the fuck out of what's happening. It's a market maker who's trading the demand, facing what it has in front of him, which is stupid buyers, so is stupid selling. That's how it goes. We've got a selling market maker, stupid buyers, and it's going to keep on going that way as long as the bulls are buying. And this is not how it goes. You're not buying, especially not retail buying. So we're going to go there. I'm going to give you the information suggesting that this might be what's at play right now. So we're going to add that brand old bulls versus bear ratios. As you can see, bears are starting to rise, so you should take care. The market maker might be balancing right now, kind of ranging, executing the demand, both bearish and bullish, but the market maker might not be necessarily trend trading, but we'll still have more bullish demand. We're talking about margin traders in here, not the bullish demand. It's just the market maker will probably wrong foot those guys, those who are trading with leverage. And as you can see, we're starting to have bearish leverage trader, which is not a good sign either. So this is not about time to trade. The market maker will probably execute both bulls and bears and try to fuck up their stop losses. So it's going to be a mess, and you don't want to be part of it. Okay, so you stay the fuck out of here. Probably we're kind of finding some kind of equilibrium in here, both bulls and bears. So we've got lots of leverage traders. So we're going to digest in here, waiting for a move to show up some point, and it's going to orientate the market itself. Market maker is going to do the opposite of his client. It's simple as that. It's always been the case, and I don't see any reason for this to go otherwise. As long as we're in that pattern, the market wants to go lower, and we've got stupid buyers who want to freaking slowing it down. It's not going to happen. So you're not going to catch the bottom out of this market. Only the market maker will, because he will decide, or it, because we're most likely talking about an algorithm out there, it will decide where to stop regarding the demand it will face. Whenever it will lack of buyers, it basically turns himself into a buyer. That's how it goes. It's going to take the opposite side of the strongest demand. When people will be asking for selling, probably because they will be margin called, it's not people who will sell on support. It's most likely guys who've been overbuying, who's basically going to be margin called and put it out of the market because of stupid use of margin. So those selling entries, when the market maker will have only those selling demands, they'll buy them fucking out. So this will be the bottom, but neither you or I can really anticipate the price. I think about a broad-based area in which I think this is highly probable to see that reversal taking place, but I'm not going to blindly buying in there. I'm just going to wait for the V-shaped structure to play its game, showing me that the market maker terminated its job, and then once I'll have it, I'll be confident enough that we're done here, but certainly not until we get that. So I'm not really searching for the bottom. I'm waiting for a V-shaped structure confirming that this is fucking over. All right? And I really suggest you should do as well. So don't get yourself into trying to find the bottom. It's not going to be the case because the structure of the current market suggests it's going to be brutal and probably unexpected. So instead of trying to search for something that you probably won't catch, or at least you will have to suffer subsequent losses before catching it, I suggest you just fucking wait because that's part of the plan. Remaining low leverage, never ever using margin trades, and being freaking patient is the key in here for success if you've been making the damn buy and hold. Now, other arguments suggesting this is the BTC1, the futures, the market, the guys who are selling you right now are basically executing their volumes on two, and it's been clear to me. Look at this, weekly charts. we're already executing pretty damn good volume at the current stage, and we're just freaking Tuesday. So there's still a lot to process, and we're already 61% of previous week's volume, so I expect this week to probably one of the biggest volume ever on the futures contracts. So it means that those who are selling are institutionals. They're using the futures contracts to sell Bitcoins they don't own, but the problem is this is expiration market, which means at that stage, those who are selling must be waiting for expiration to come, or they will have to buy themselves out if prices are expected to be higher at the expiration date. So I think it's a short-term movement, so I don't expect this to last long. I expect this to be short and brutal, so the market maker will probably have to rebuy themselves out, because as an expiration contracts, if they think the price will be higher in the end, they'll have to get the fuck out. So there will be buying Bitcoins cover kind of trades in here. It's just those short-term selling entries are meant to fuck up whoever's ready to buy at stupid prices. And obviously that's how they go. They're going to take your losses, buy you out, and have better prices that if they want. Let's consider it that way. The market maker may have wanted to buy in here, but they saw, okay, you know what, we've got way too many leverage buyers, so let's get them the fuck out of here and buy their losses. Okay, instead of buying here, let's buy our clients' losses. That's much better prices and much better risk-reward ratio, because if you're buying in here, obviously you've got much better prices than if you do in here. It sounds normal to you right now, but think it as a robot. For a robot, buying in here shows a much better risk-reward ratio than buying in there. And they're probably going to buy at lower prices. They will buy when no one will buy and everybody will be stopped out. That's simple as that. When retail traders will be out of money and nearly stop loss, they will start triggering the stop losses and buy them fucking out. So you don't know where the stop losses are. We can speculate on a price area they probably will be into, but we just don't know for sure. So we're just going to wait for the game to play until its end, and when it's terminated, we'll be ready to buy again. All right? So this is clearly, to me, final move. The structure suggests the market maker are selling, but they'll have to buy themselves out. So I still think a bottom will be found after that move, but whoever the fuck has been stupid enough to buy with leverage is going to be pulled out first, and I'm not buying until I see them fucking out. So next step is we're going to have market makers buying at the dip, and we're going to have retail traders out being margin called, which is exactly what I wanted since the first day. I wanted the speculators out. No matter how, I just wanted them out. Apparently, the desert crossing phase hasn't been enough to pull them out, so they're still in and they're leveraged in. So, perfect way to get them out is to go at lower prices, brutally, market makingly, and just let it go. So don't fight it, let it go. Don't try to catch the bottom. Wait for it to terminate. Whenever it will be done, we can buy safe. Yes, moving on to other asset classes. So obviously Ethereums have been breaking to major support as well. So just let it go. That's how it is. Ripple as well. So just let the damn knife fall. Don't try to catch it. Wait for the market maker to terminate the job. Catch up the low liquidity area. And whenever we'll be done, we'll be ready to buy again. But not now. I suggest being aggressive is the worst case scenario. And if you want to be aggressive, at least wait for interesting prices to do so, which is, to me, at least being below 3,800. And I pretty damn think that the market will even go lower than the 2,900, because we're probably going to have lots of stop losses in there. The question is, it's a basic thing. Consider it that way. The market will bottom up whenever all the damn stupid margin traders will be out. So the question is, where is the margin call level? The more they buy, the higher that level will be. So as long as you see people buying or trying to buy the dip, that's good. Means the dip will be higher. Okay? When they'll stop buying, means that they will be close to being margin called, you'll know that the prices are not yet bottoming up, but probably soon to be. So you still see people trying to catch the bottom, panicking. So facing panic or fear, at that stage, I see fear more than panic. Okay, panic is really when you'll see the V-shaped structure forming and basically everybody saying, shit, this market will never climb again, just because there will be margin called and desperate because they will lose it all. That's simple as that. They bought the highs, they bought freaking high prices, they tried to hold when the prices were just going bearish. They put some money in there thinking that, okay, you know what, I bought 15,000s. Now I'm putting an additional money that I never intended to put in the first place. I'm adding that money in the market in here, so I got an average price of 10,000. And yes, when we'll go to 20,000, it will be a nice gain in the end. So no problem with that. But that's as stupid as it's ever been. You never should have holded those prices high like that. And buying in here could only have been done with a tiny amount of money and decent risk management, which means no fucking stop losses. You should be ready to go to zero, and if it goes, then that's how it is, okay? No stops. You shouldn't be in the market maker's book, okay? You bought yourself in, you're never ever going out. It's pure and simply this. That's the only way you can do this right now. Anything different is just a wrong choice that's probably going to lead you to a loss. All right. Aside from that, we're going to make a quick recap of swing trades that are trading very dangerous prices. So we've got very dangerous price activity in here on the AUDNZD. We're still having the AUD who is facing short-term problems with an NZD who is keep on surging. So we still have the NZD below resistances. The Kiwi is under major resistances, but it's kind of working them out and not yet showing bearishness or bearish reactivation below those resistances. And in top of that, we've got the AUD who is really struggling below resistances of itself and not managing to break them up. We've early broken the resistance, but we can't find the bullish momentum. So that's hell of a mess. Here, I think it's still short-term movements that will reverse sooner or later, but at some point we need to have that bullish momentum on AUDNZD, and from what I can see right now, it's just not happening. So it still requires patience and not putting yourself into leverage trading or too much leverage trading. I'm still leveraging that market because it's not a market that's going to move 2% in a day, but it needs to remain low leverage, okay? Because I think that the stop losses shouldn't be close to the current prices for obvious reasons. In here, the market seems to have abnormal and extreme movements. And facing this, you don't want to take extremely aggressive positioning. Otherwise, it's extreme plus extreme. It's probably going to lead to a loss. So this is what we might want to avoid. I think the market sooner or later will reactivate, and we're just waiting for those signals to show up. And until they do, we need to remain cautious and speculative. Speculative just means we don't know what the fuck is going to happen, and we need to be ready for the most probable scenarios, okay? And if it turns out to be a scenario we weren't expecting, like the market decides to go bearish in the end, then we'll have to take a stop loss, and that stop loss must not be more than 5% of your assets, of your equity, because that's not what I'm not ready to lose more than that. I'm ready to lose 6 to 7% in there, and no more than that. If the loss comes ahead of this, I'll have to get out, because I don't want to lose 20% on AUDNZD. The thing is that I'm ready to lose a little bit more than my usual scenarios, because this is a long-term scenarios and the expectations are enormous. So yes, obviously I'm ready to handle the short-term bearishness, but it's not short-term, okay? It's short-term on a weekly chart, but it means the overall scenario to me is going to last 2 to 3 semesters. So yes, obviously a few weekly candles is short-term to me regarding the global time frame and time scale of that scenario. So no panicking right now for AUDNZD. It's just most likely we're trying to break down. We'll see if it works out, but if it fails, it's going to be a strong bullish signal. But at that stage, I remain really, really cautious about what we're playing at and playing with because it's dangerous. We nearly have no signal. It's just cyclical signal in here. I would see some strength coming from momentum. If we keep on showing some bearishness, I just let it go. It means the market will try to break down that support, even though it makes absolutely no sense to me. Doesn't mean the market has to be rational, okay? All I'll say in here is that if the market decides to go below that level, I'll have to reduce my leverage and reduce it, but that's all I'll do. I'll remain bearish I'll remain bullish anyway. I'm not going to change my mind on that market. I just think that's a damn fucking range that's been lasting for way too long. And if it has to go this way, try to fuck up some stop losses in there, then just do it. But anyway, anytime this market will reactivate, I think we'll be mature enough for the final burst to come. Normally, we shouldn't be breaking down that support, but if it happens, because for some reasons the market just want to fuck up the liquidity, then just let it go. We've got strong volume, and this is not something you might want to avoid. If this is bullish reactivating in the end, means strong buyers have been putting themselves in the market. If the market keeps on going bearish, that's not a good sign. It means strong bearish demand. We're daily chart basis. Look at that. We've never seen that volume for quite a fucking long time. If we're facing, once again, market, it means the market maker can just see the strong bullish demand and just want to fuck up your stop losses first before going there. So we could very well have to see something like that. Market going there, fucking all the stop losses, and the market maker will just rebuy itself when the bulls will be out. That's how it is, just a simple range. We're range trading, which means the market maker can do whatever the fuck it wants. It is basically hands-free to do whatever it wants, and if it wants to fuck up the bulls, it has all the power to do it because unlimited liquidity, it can do however the fuck it wants with that market, and if it wants to maintain pressure on the AUD and let the NZD free to go, it will push the fucking AUDNZD to the downside, even though technically everything suggests we should have bullish demand. If you've got strong market maker deciding it otherwise, it will be otherwise. All right? So don't fight it, even if it means stupid and crazy fucking no sense. You just let it go because if you're versus a market maker, it will always win the battle. All right. But that means also creating distortion. When the market maker is working in, it's going to create distortion in the market. So if we are about to distort the AUDNZD cross, it means after the work of the market maker, we'll have strong bullish reactivation because we'll be in a market with no sellers, okay? So if I had to be proven wrong in here, and if the market maker is pushing us through supports and taking down my stop losses, you can be damn sure that whenever it will have to get the fuck out of here and buy himself out, I'll be damn ready to buy again. I'm just going to be bullish forever into AUDNZD as long as it isn't validating. Whenever it will show some validation, you can be damn sure I'll be among those who will be buying. Okay? So it's just the only uncertainty when it comes down to speculation is not that you should change your scenario, just that you must accept that from time to time you just be wrong-footed in terms of timing. Okay? It's just the matter of liquidity. If too many people are buying with tiny amounts, the market maker will just fuck them out and buy their losses. That's purely stupid, yes, because in the end the market will go search for your targets. It will just do it differently, simply because this is how it goes. Market makers are there to make money, and from time to time, they'll just make money out of other people's decisions. And when too many people are doing the same thing with low leverage, with tiny amounts, it's easy for the market maker to just decide to go on the opposite side to buy the trader's losses. That's how it is. That's how it's always been, and that's how the market is. This is why it's difficult to make gains, and it's not simple to trade. You must accept that from time to time, stronger persons will trade, even though their decisions might be as stupid as it is, they handle the market. You don't. All right? Moving out of this, so still we'll have some strong demands on yieldings right now as the stock market is kind of tumbling, or at least kind of having problems at the current time. And we're trying to figure it out. So we got the gold demand, obviously. So I would say, despite AUDNZD, everything's going according to the plan actually right now on the forex. So I see no reasons to panic. I think slowly but steadily the dollar is losing its strength, and we'll see how the stock market, the US stock market especially, is going to react. Yesterday wasn't that good of a session, but we didn't break any support. We made the lowest close, the candle close we've been making so far. So yes, we've been closing at the lows, and that's the lowest close we've made ever. The thing is that we're still having lower shadows below, suggesting bulls have been buying those prices the last time. Will they hold them or not is the tough question right now. So I would say bears are in control. Clearly, to me, it seems like they are. The question is, are we mature enough to make new lows? I think we are. It's just a question of timing today. If you have a look at this, the Nasdaq is going to open 6,577. So right at support, so we're going to open right below support, and we'll see how it goes. Either the market will make a tiny lower shadow candle and buy itself out, and we're going to create a flat range, so ABC, ABC, and then we're going to flat range 1, 2, 3, 4, 5, going back to resistance and selling it this time, or the market decides we're mature enough to fuck it up, because we're still having the same distortions. We've been creating distortions for quite some fucking time, so even if we've been ranging for just a few days, we're mature enough to get the fuck out here. So as I said, buying in the stock market, in the US stock market, is not an option, because the market is under the heavy distortions that have been lasting for way too long, so the market may be irrational to the downside as well. Okay, if you want to buy something, buy the euro area, because we haven't been stupid like that in the euro area. So I'm currently buying in intraday basis the German index. Slow buying, speculative. I'm rapidly paying for my stop losses and letting go for the rest of them. It's just I'm not doing this in the US stock market. Way too dangerous. Okay, way too dangerous. Because I think in here we might find some support. Just consider it that trend line. The market is trading it. Okay, we're going to open below today, but that's a question. Is it going to last? Is it going to fail? I don't know. All I know is that if we go below and if we start triggering stop losses one by one, we've got all the Apples, Nvidias, and things like that. We're panic selling right now, or might be about to go panic selling. So yes, if we go down, we've got plenty of room to go to the downside. It was expected. I still have bearish trades on the Nasdaq, and if it goes below, then great. You know what? I'll let it go. That's how it is. But I think it's a little bit too aggressive to pile up the bearish positioning right now. So reinforcing position as we're still working out that support seems a little bit too aggressive to me. Okay, so I'll wait for today's candle close to be really closing at the low and below the support to eventually consider that support broken and opening the path to lower valuations. Even though I see that. Got plenty chances to go lower. It was part of the plan, so really buying in here is not an option for the US stock market. But selling might be a little bit too aggressive also. I think, at least in the current shape of the market, I would suggest more patience for the bears and not necessarily going panic selling right now. Okay? That's all I had to say for the swing trades. I'm still watching closely for an eventually buying NVIDIA in here, so I'm going to show you why and what prices I'm interested in too. So yes, have a look at this in terms of long-term scenarios. We've got a short-term dip, not a dip, let's consider it a hole into liquidity in here, so $140. So I'd say right below that support we could try to fuck up some bears. So get in here, trying to trigger some stop losses. And probably gonna find some bulls to buy in here. So I would say when we manage to get ourselves below that price, eventually searching for potential intraday buying entries. But that's all I suggest. And it's gonna be short term and just for a pullback. Probably pull back into 23% retracement. No more than that. The market will remain bearish, I guess, but it's just we might have a technical rebalance in here. Low risk trade to make. So I would suggest waiting and eventually buying for that 23% retracement on counter trend trades. So very low leverage is absolutely necessary in here. It's just to try to make easy money out of low risk potential entry, but obviously it requires a very large stop loss. So if you're buying in that area, watching for that price, you need to be aware that the stop loss must be a 1-to-1 ratio in here. So just size the position accordingly for the loss. You must not lose more than 1.5% in here. So you're not trying to catch up more than 1.5% gain as well. It's as simple as that. Okay, so it's a tiny gain, but I think easy gain to make, because we have far more odds, in my opinions, to get back there before getting in here. All right. That's how it is, okay? I think we've been suffering enough in NVIDIA that we might have some technical pullbacks, and when the stock market will try to build a range, I think those assets will be part of the rebounds, technical bounce, because we're basically buying themselves out, rebuying and building a short-term bottom that will oscillate in between for a few days before eventually going lower when the stock market will be ready to spare some gains again. All right. Now we go intraday trades. We're going to prepare for this today for today's session. We're going to trade SPX. We're going to apply strategy on the SPX. Oh, and by the way, this afternoon I'll release the indicators. I know I've been promising this quite a few days already, and I'm sorry about that. I had priorities to handle, and I just couldn't make it. It's hell of a job to make. It's not just going in there and publishing something and taking 5 minutes to do so. It's really a lot more than that. I'm going to have to send hundreds of emails, build the templates, things like that. So it's hell of a job. But yes, I think unless I have unexpected circumstances to show up today, normally I should have more than enough time to handle this today. Okay, and tomorrow, obviously, we're going to have the educational video. It will be Wednesday. So yes, tomorrow we're going to make an educational content about applying the strategy on real markets or any suggested market you might have to share with me. We're going to make an analysis in here and just applying the strategy with those new tools. So currently, I think we're building that range. We're upon support area. Generally, when we do build a triangle structure like it is right here, the market generally retraces approximately 61% of the impulses. Basics. All right, so we've been doing that. We've been retracing 61.8%, can go up to 76.4. So you have to have those levels bared in mind right now. So just put a level in here. We're still, damn it. We're still, god damn it. We'll still have another level at slightly higher that you need to bear in mind for your intraday trades. Okay, and we're not targeting, if this happens to be the bottom, we're not going to target more than 61% of the bearish impulse. All right, so if we go it this way, we're going to have to highlight 76%. It's going to be there. Okay, fuck it. All right. Okay, so all those levels are the technicals we're going to have to trade within on the intraday basis. So we're going to have a look at the 15-minute time frame. So what's going to be the open? What time is it? Okay, so we are approximately 2 hours from the opens. So this is subject to changing, but currently we're trading 2,672 on the futures and 72. Okay, so we're right at we're right in here, right at the previous lows. Still haven't yet broken them. So I would say in a 2-hour basis, we've got strong support that's been built out there. Okay, so we're gonna have to highlight that. All right. So I would say now look at the candle structure. Okay. This is lower shadow candle, and we're making bullish engulfing out of here. So I would say here is where the support is. So we've already touched the upper boundaries of that support. We can try to get ourselves digging a little deeper into this, but what we don't want is to have candle closers below that. Okay, so 2-hour candle closers below there is going to be an alert. So we're going to set this alert right away. Okay, if we've got a 2-hour candle close below that level, it's going to be a problem. Okay, so we go there. It's not going to be open-ended. We're going to terminate it today. So, what the fuck? Okay, we're terminating tomorrow. And we're going to say, yes, once per barrel close, if we close below, so I want to crossing down that level. Okay, so I want the close to cross down the level we've been saying. I want to be alerted. Okay, it's going to be a red flag for us. Then, sorry, it's 15 minutes, not 2 hours, okay? And in 2 minutes, we're going to have to trade any intraday signals we have without breaking down that level. As you can see, triple signals right now. I'm still thinking about whether or not I'm going to give you access to this, because it has great power, and not to mention, but great power implies great responsibilities. And the problem is, I'm not really sure that most of you guys have those responsibilities. And I think most of you would just stupidly try to automatize their trading and make automated trade, which I absolutely hate. And I always stand at that. I would say be cautious right here, because you should really be. And anything different in here is going to be problematic. So I'm thinking about it. So you won't have this one today, maybe in the next few days, because I think it has really some great advantage, because it can help you to trigger alerts. That's basically what I want you guys to use it with and use it for, to trigger alerts, but not to blindly trade out of those signals, but because you still need to filter them out. You need to trade signals that happen on technical areas. The algorithms will filter them out most of the time, but there are still going to be some fake signals that you shouldn't get yourselves into. And you need to trade prices that matters, okay? And this is why, okay, so let's put it straight. I don't know if I'm going to release that. I bet that you're going to beg me for it, but I need to explain you why, for now, I still think it's not a good option. Maybe in the future, or eventually, I will just release this to 6-month-long users, just to make sure that those who will use it have been using the indicators for long enough to understand the strategy. But certainly, I'm not going to give it to beginners to just simply put automated trading out of it. Okay? Because I don't want that. I want only people who understand my work to be able to have access to this. And it's not to invite you to stay long-term users or anything like that. It's just, it's powerful, and it requires responsibilities. And I think those who are starting to learn my strategy don't yet have it. All right? So I have multiple options in here. I still haven't made myself a choice. So I don't want to say something I haven't been decided yet, but I don't think any way the beginners who are learning my strategy will have access to this, because it's way too dangerous. Okay? It's going to ease things, and easy is not good when you're trading, when you're beginning. Okay? You have to learn it the hard way, make mistakes, learn from those mistakes, grind your way up. Walk foot by foot. That's how it is, okay? And I don't want to make it easy to you, because it's not meant to be easy, and it's not going to be. So it can help you if you've been getting the point of the strategy, and I think that's going to be a plus, a huge plus, because you just basically set alerts, okay? You go out of this indicator, you just put an alert on this, and just get the fuck out of your chart. So I think it's a plus, but it requires to know how to use the indicators themselves before using it. So anyway, that being said, we're gonna take the questions. So yes, today is going to be a buy scenario to me on the intraday basis. We're waiting for new signals at the open. So I'd say don't buy the first 15 minutes. Wait for the market to build a dip in the blue area. And if it does, and if it managed not to make a 15-minute candle close below that level, eventually trying to buy an entry, kind of a range trade. So buying in here, the objective and the target is to go up here and no further away from there. So you just wait for the market to try a play its game in here. And you obviously have to take your profits out there. So you've got the 61% up here, okay? This is where you want to get the fuck out, okay? This is where we've got the target. So this is maximum target, and if obviously we're probably not going to reach out to that price today, but probably more tomorrow, heading into Thanksgiving. Eventually, this could be a possibility. So if we go out there, be ready because it shouldn't be done today. Okay, probably today we're just going to handle breaking that level and dying in between those two, and probably just tomorrow heading towards 61.8. So you might have to spare and take a 50% profit in there and leave 50% for tomorrow, probably heading at higher prices, and then just let it go into Thanksgiving, enjoy that game with your friends and family, and that's it, all right? And if it happens to be a loss, that's how it is. That's part of trading. Don't blame yourself. You just apply the strategy, and it's not going to work fine each and every time. All right. So guys, see you tomorrow for the last of that week. Obviously, I'm not gonna make a show on Thanksgiving. Gonna let you enjoy some family time out there. So tomorrow will be the last, and next way, and right after we're gonna catch up on next Monday. So see you tomorrow for the educational video that we'll make to help you use the best way this new way of displaying the indicators. And I'll remind you about that before switching off. Those indicators are not brand new. They're still using the same structure, the same strategy, the same tools. It's just the way it's been represented to your charts. The visual display has changed, but that's it. That's all. Then what's happening in the background still remains quite the same. We're still trading and trying to limit the risks out of using cycle trading plus momentum. That's simple as that, plus a chart analysis. That's the strategy as it has always been for the latest 5 years. It hasn't changed, just the way it's going to be displayed is going to change. Bye, guys. Oh, sorry, questions. Oh, sorry about that. I was about to forget about here. Swing market forecast, yes, and crypto ends. Okay. Oh, you've been timestamping. Okay. No. So thank you for that. So no questions. So no problem. If you have questions for tomorrow for the educational content, like we've done last week, if you had problematic trades or anything like that you want me to review, you can send them into Discord, obviously. And if you just don't, no problem with that, as we'll have a busy schedule tomorrow anyway. Just talking about actual trading with the new indicators, how to set alerts, things like that. I'm going to show you a step-by-step strategy to trade safely with them tomorrow. Bye-bye.